We are here, we are here, we are here. On this amazing day, everyone, this is Cam Jones FX Daily Analysis. Disclaimer, I am not a professional. Please watch these videos at your own risk. These videos are for entertainment purposes only. Thank you. Friends and family on Discord and Telegram. Families and friends will prosper. Let's get back down to business. Alright guys, let's take a look at the market. Today we'll be marking up NZD, CHF, that is the New Zealand dollar versus the CHF franc. Okay, back in September of 2008, the market has started off in this area here. We had a straight push down to the bottom of an area of support. From then the market pushed back up to an area of resistance. Came back down to touch area of support again. From there the market went right back up. The market retested areas of resistance not once but twice and 3 times. The market basically consolidated. After the consolidation, the market broke through areas of support and went down. I pushed 3 pushes to the bottom. 1, 2, and a slight one right here, 3. Market came back down, hit a major area of support for the 3rd time. From there, the market came up, ended up reaching a lower levels of resistance. From then the market wasn't able to break through the resistance, so the market went down. As we can see, there's areas of peaks where the market has created some type of antenna or antennas, and the market turned around and went up. So this area here, we can see 2 to 3 antennas to the bottom, 1, 2, 3. And once we see this 3 antennas to the bottom, we can see that the market pushed up, major push up. Same way here, we got 1 antenna to the bottom and some stragglers here. The market came down, wasn't able to hold, pushed right back up, major push back up to the top, consolidated. The market came down for the support for the 3rd time. And we see this wick is this wick is an antenna, a single antenna that pushed down, wasn't able to hold, pushed back up, closed out. The market ended up turning around and went back up. And we also seen it for the 4th time here. Market came down. We see that 1 antenna to the bottom. The market is what? Look like it's trying to push up. So Forex 101 guys, first thing we're going to do, we just did, is identifying the market structure. We're going to clear our screen. And we're going to go head over to where price action is. Price action is this last active candle right here. So we're looking for that candle to break out this area here to lead further up to this direction. If it doesn't break through this area here, it's going to come down. We have to figure out our overall trend. For number 2 would be identify the overall trend. So we do understand the market structure. The market came down like it's going to be a push up to the top. The overall trend looks like it's trying to turn up into a uptrend. So we have that uptrend set up. The 3rd thing we'll be doing is identifying placement for our SR lines. We're going to start off that on a monthly. So if price is here with this current candle, if it broke this level here, the next level up will be somewhere here. If price action here and it came down, it broke down to the next level, it'll try to come down here. So we can see that we just put this area into a range. If we go back to price action, we're looking for price action to break this area here to see if it's going to go up. If it doesn't break this area here, it's going to go down. So we're going to place another SR line somewhere here. So now we have that setup where we can see if the market goes up, if it breaks through, it's going to go up to the next green line. If it doesn't break this area here, it can come down and retest the trend line to break up further, back up, or if not, it can come back down to our support line to reach back up to higher highs. So if we go down to our weekly time frame, we're going to still work on setting up our SR lines on the weekly time frame. We're going to change the color of our SR lines on the weekly time frame to blue. So we're going to mark up SR lines between our areas of green. So the easiest way I like to do it is I start off high, I look for peaks. It's an area of peak, already got a green line. Let's go into the next area of peak. There's a peak here. There's another peak here. There's an inverted peak here. There's another inverted peak here. And we probably have some inverted peaks in this area here. And we have another inverted peak here. So that looks much tighter. So as we can see, the SR lines were created on the weekly time frame, which was the blue ones. We can see that the blue lines actually lined up real nice when it came to the candle of price action, bounced around and hitting the areas of the SR lines of the support and the resistance, bouncing back up, touching next level up, broke through, wasn't able to break up higher, came back down, area of support here, area of resistance. So everything is landing the way we want it to land. It looks clean, it looks nice. So from there, what we're going to do is we're going to check out we're going to go down to the daily time frame, and what we're going to do is identify patterns for entry. So we know we're in an uptrend, so what I want to do is I want to go back to the monthly. Let's go back to the week. Let's go to the weekly. Let's tighten up our trend line a lot closer. Go to the daily. We're going to see if we see a pattern. So if we come in this area here, we do see a pattern. Or we do see a few patterns. So the market came up from somewhere. It came back down. We see a W. From there, the market pushed up, retested previous levels of resistance. It broke up further. And what we see here, we see another W forming. We have some retesting previous areas of support. It broke the area of support. Now we see that W forming. Now the market is trying to retest areas of support, and once we get that confirmation in this area here, we can take it up to the next area, to the next area, to the next area, and so on. So we are in a buy market. The market is going up. We see two W's here. We see another W here. We see a push up, pops another W here, and on, so on. So if you had to set our position, if we're looking for that breakout candle to engulf, look for an engulfing pattern. So I'm going to show you guys what we're looking for in a daily time frame. What would it look like as an engulfing pattern? So if we go to the Forex pattern cheat sheets and we go to images, and this is okay, so we're going to go to cheat sheets. We're going to look for some type of engulfing pattern. So we have a few. So the market is trying to do one of these moves here. It could be one of these moves, or you go to another page and find something similar. But bullish candlestick patterns, it's probably going to try to do a hammer. It's going to probably do an inverted hammer, a dragonfly, bullish, piercing patterns, etc. But all we're looking for is the market to do some type of bullish candlestick patterns. All we're looking for is the market to, one of these green candles, to overlap the red one in any order. It could be a green candle form, which is a doji, and the second one form over this one, it overlaps the red one, we can take entry. If we see the play here on inverted, we can take entry. If we see a dragonfly doji, we can take entry as well. Or we see the bullish engulfing. Bullish engulfing is one that I see all the time, most of the time in the market. You always see bullish engulfing, piercing patterns, morning stars, and even doji stars. So if you keep your eyes on the bullish candlestick patterns, and we head over to NZD on the daily time frame, and once we receive this candle here, once this candle here engulfs over this red one, we could take entry. It could be 3 green candles coming up, but if it's three green candles coming up, that's 3 green soldiers. If they overlaps this red one, you could take entry and look for the market to go up to the next level before it drops to go up higher. Alright guys, that was Forex 101. We just basically identified the market structure on the monthly time frame. We identify the overall trend direction on the monthly time frame. We also identify where we're placing our SR lines on the monthly time frame and on the weekly time frame. Last but not least, what we did was we identified patterns for entry. So on the daily time frame, once we see that W and it's an engulfing pattern here, we can take up for the buy, and we can take that trade. So let's say we found the trade entry here, we could take it to the next level. That would give us about 68 pips. If we had to create a stop loss, bring it down to the wicks, maybe here a little lower, give you an estimate of 40 pips. So if it goes back, stop loss 40 pips out. If it breaks up to the next level, it's 60 pips, 68 pips to the high, which is good. You can double up, triple up, quadruple up on that 68 pips any way necessary. If the market breaks up to the next level, you can take that for a total of 116 pips. If you want to take it up for the third level, once you see that breakout from the second of support, that will give us a total of 227 pips. We're looking at a total of 227 pips if the market goes into our direction that we feel like is going to go in once we see the patterns in the market. Okay guys, thank you for watching. This is Cam Jones FX Daily Analysis.